Friends, hello everyone, I'm so glad to see you again on my channel. How you been doing? So the topic for our conversation today is volatility. What is it, why we need to know it, and most importantly, how we can use this data to build and improve our trading strategies and as a result get more profit from it. You will learn all this today. So as always, we will not limit ourselves to theoretical knowledge, so I'll show you how binary options trading goes and in what situations I open trades. So watch this video till the end and you will learn a lot of interesting things. So in the description, as always, below this video, you'll find a link to my Telegram channel where you can ask me any questions you're interested in. There you'll also find a link to my personal Telegram channel where I share my daily trading signals. And in addition, I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. And in addition, if you write to my personal account, you will get a link to sign up for PocketOption with a gift deposit 50% absolutely free as a nice bonus. And now let's move on to the PocketOption and let's get started. So on the screen we see a chart of quotations of the exchange currency pair Canadian dollar, the Japanese yen, with a profit of 89%. This is certainly not the maximum possible, but it's not bad either. Let me remind you, the maximum profit of our broker is 92%. So after analyzing the situation in the market, I opened the first trade to decrease by $300 for 1 minute. I made such a step after studying data from the Williams indicator where I saw a decline in its line, which occurred against the background of the growth of quotations. Of course, this cannot be, which means Williams gave us a signal about a possible price reduction in the near future. So now we can begin our conversation. So volatility is the range of price changes from the maximum to the minimum during the trading hours, day or month. The higher the volatility, the higher the range during the trading time period. Volatility can be measured over various time periods. If we look at our hourly chart and measure the distance from the maximum to the minimum, we will get volatility in 1 hour. So in addition, we see on the chart that the deal is being completed and it brings us $267. So let's continue. As a rule, take into account the average volatility of the last 10 candles. Roughly speaking, the last 10 candles are summed and divided by 10. What does volatility depend on? It depends on the number of transactions on the market, the players, the trading session, the general state of the economy of a particular currency, and, of course, on speculation. Depends on how speculative the market is for a given currency. Please note that volatility can be measured both in points and as a percentage. So now I'll open another deal, this time for an increase, but the amount is the same, $300 for 1 minute. So this time I took into account other factors, namely the moment that the price decrease occurred impulsively, and very often such impulsive movements and with rebounds in the opposite direction, as for example, it was already 3 minutes ago, where the price bounced up from about the same level. Let's check it out. Let's continue the conversation and now let's move on to perhaps the most important question: how to use volatility data to make a profit. In fact, everything is quite simple. As they say, everyone knows about it, but no one uses it. This is especially true for intraday trading. No one wants to apply the simplest rule, but more on that later. And now we'll look at the chart. The price is rising So the deal is complete and it brings in another $267. So let's say you know that the average volatility of the Canadian dollar pair the Japanese yen is 94 points. Question: if the price has gone up 90 points since the beginning of the day, is it worth opening a deal to increase? The answer will be obvious. We shouldn't do this because the probability that the price will pass some more points is too small. Wherefore, it's not worth opening a deal for an increase. And on the contrary, you will pay attention to bearish direction. Everything is extremely simple, but for some reason, people forget about this simple technique and do not follow it. So we go further and open another deal, which will be on the decline at 300 for 1 minute. Here, despite a certain increase in quotations, the price approached the conditional level, which was a support for a few minutes, and now it's very likely to become a resistance, and the result led to a price rebound down. In addition, the red line of the iron indicator, which is responsible for the downward movement of the price, is near the level of 100 and the blue line is at 0. So, which also indicates a possible price decline. Let's continue the conversation. I think you're convinced that volatility helps to make a forecast very easily, and I believe that it's necessary to include volatility on intraday strategies in your sources of analysis to enter transactions. So similarly, you can do analysis on any other time frames. Look at the chart. The expiration has ended and $267 is replenishing our trading account. Let's go back to the conversation. Of course, there are days when some movements become more or less, but I still recommend relying on statistics. It can be used to calculate the possible movement of quotations. After all, if the average volatility of a pair, for example, is 200 points, then it's silly to expect a movement of 1000 points from it. Worse, volatility can also be used for risk calculations. Let's go back to trading and open another deal to increase our deposit by $300 for 1 minute. When making a decision, I took into account the behavior of the Williams line, which, despite the price reduction, occupied a horizontal position and even tried to grow, whereby giving a signal about a possible increase in quotations. So I waited for the best conditions and opened such a deal. As for the topic of our conversation, I know that naturally the market is not obliged to obey your calculations, but it gives some support for your convenience in trading. Now consider how to calculate volatility. Of course, you can manually measure each candle and then divide by 10 using a calculator. It's not that hard, but there are special services where you can view the volatility of any trading pair. Let's go back to our deal. It's being completed and replenishes our wallet with another $267. So nice. So, getting data on the volatility of currency pairs, you can use them to build or adjust your own strategy. Surely you have already come up with some ideas as we move on. But in this case, you should also know that volatility changes seasonally. You probably heard that it's very difficult to trade in the summer. What is the reason for this? First of all, due to the fact that there are few people who trade in the market in the summer. Everyone is on vacation, and as a result, there is no active price movement on the stock exchange in the absence of bidders. Now I've seen an interesting situation and I'm opening a deal to increase by $300 for 1 minute. Everything is simple here, and Williams line is growing. At the same time, the quotes of our currency pair are also growing. It is the synchronous movement that gives us a signal about the possible continuation of the price movement. In our case, about a possible increase. Now let's watch the deal and continue studying volatility. So we found out that volatility changes seasonally, and believe me, this is happening in all existing markets in the world. Of course, there are times when something global happens and when it changes very dramatically. If there is no such thing, then volatility quietly decreases or increases. Another interesting fact is that volatility can also decrease or increase from trading time. But about this in a moment. And now, our deal, having completed, sends us another $267. So we continue. In other words, we have several working sessions. There are two of them, daytime and evening. It can be noted that before the opening of the American stock exchanges, the market is sluggish. With the entry of the states into the game, the market begins to move strongly. When the evening session ends, the market comes down again. And this is due to the fact that important economic indicators and news about political events are published during the American session. Moreover, American indices affect the indices of other countries with four assets too. Another situation has developed in the market, and I'm opening a $300 reduction deal for 1 minute. After the increase, the price again approached the conditional resistance level. At the same time, I do not see signs for the strong price increase, especially since the red line of the hour indicator still continues to dominate its blue line. So I expect another price decline. Let's check it out, but in the meantime, let's go back to the conversation. So in addition to the above changes, volatility can be distributed under a certain movement. This implies all movements in general. When the market grows up or down, changes by a large number of percentages, traders call this a volatile movement. And it's also called the distribution phase. When it ends, the flat begins. And now a deal has been completed successfully again, whereby bringing in another $267. But this concludes the trading session. Let's summarize the results. So we spent less than 10 minutes today to make 6 successful trades that brought us $1,602 net profit. Yes, the profit was not the maximum, but I think that the result of trading is excellent. So from today's conversation, we should remember the following. Volatility is directly related to liquidity. If the liquidity is large, the volatility is small and vice versa. However, there are exceptions, and this dependency doesn't work. Volatility can vary by time, price, and season. If there are no global events in the world, then use average indicators for your currency pairs, which will definitely help you in the analysis. So I hope this information was useful for you and it will help you earn on binary options. After all, any practice can teach you to understand the market. But remember, if you don't have enough experience, then before opening a deal, you need to carefully assess the current market situation. In addition, it is necessary to use indicators, the signals of which you understand, because their use reduces risk and allows you to make a profit over a long distance. So it would be really good if you continue trading binary options, because only here the analysis methods are not complicated at all. So guys, don't forget that in the description below this video, you'll find a link to my Telegram channel where you can ask me any questions you're interested in. And wherefore, you can also find a link to my private Telegram channel where I share my daily trading signals. And I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. And in addition, if you text my personal Telegram, you will get a link to sign up for PocketOption with a gift deposit 50% absolutely free as a nice bonus. So dear friends, this offer is very interesting and I hope you have made the most from this video. So guys, thank you for being with me all this time. I hope you like this video. Thank you for watching till the end. And if you really like it, of course, subscribe to this channel and click on the bell so that you don't miss anything interesting. So that's all for today, guys. See you in the next video and wish you only successful trading sessions. Bye.